talk about current market conditions and how do you trade. Let's go back to which chart should we use. Let's use bar chart. We like our friends at bar chart, so we're going to use their chart. All right, daily. Okay, so spiders reach close to 300 level on right before the 4th of July. If you read the market commentary that I've been writing, was saying that if we have favorable interest rate decision and the expectation that the interest rates are going to be lower, then the market has an opportunity to reach 300 level. We reach 300 level, potentially overshooting to 3 or 4. At this point, I'm not sure if this is going to happen. Again, I think in the past 12 months, interest rate decisions are driving the market bias. We had great unemployment numbers, positive news, but with that expectation, potentially lowering of rate, interest rate decision will be put on hold, where the market expected lower interest rate. And as a result, with the expectation that potentially interest rates will not be reduced, you can see market is down to 296. I think the next level of support. We do have 296 level. I would say short term, that's the level of support. If we breach the 296, the next level of support will be 50-day moving average, but potentially retracing to the 290 to 88 level. So as of right now, I would structure the portfolio. If you long the market, I would start hedging, buying VIX, VXX, buying spiders put. You design strategies that will benefit from the market, potential market continuation of the market sell-off. I would keep an eye on Treasury. Also, if you're in the live trading room, you've seen that I've been bearish on Treasuries. They are, if you look at the five-year chart, on bar chart, let's see. You can see we reached the level we haven't seen since, well, June, October 2016. So treasuries are definitely overbought, very low yield, and right now we are at 131.80, 131. Not a lot again. This support here at 130. We're going back to June 4th. So it's been 30 days. We were at 130. That's the key level I would watch. We'll probably reach that level. If we break the 130 level, then the interest rates will continue to go higher. Probably 50-day moving average is the next one-day chart. So 128.70, I would say, is a support. But you can see kind of interest rates are rising, prices are falling, with the expectation that Fed will not lower interest rates. Let's see VIX. Let's look at VIX. July 2000. We can see this is a VIX futures. Futures, we can see we were as low as 14 level. We're going to jump into 14.5, 15. So VIX has been low. We're going back to, let's see, let's do 2-year chart. So you definitely can see support 14 level. We reached that low support. So if you again long the market and the treasury prices are going lower, yield is rising, that potentially will cause market sell-off and the VIX is going to rise. So one way to hedge is you buy VIX futures. You can buy ETF if you're not comfortable trading futures or options. I would suggest VXX. Also 52-week low, 24.92 at this point is rising. So this is another way to start hedging your prices, your portfolio. Other indexes, IWM, Russell 2000, small caps have been underperforming. We see haven't reached the 52-week high. Currently slightly down, trading in the range between 160, next level support of 146. I would keep an eye on US dollar. So strong unemployment numbers, stronger dollar, euro is selling off. We've seen euro rally, dollar sold off. I think the expectation that US dollar is going to continue to go higher. And if US dollar is going to continue going higher, that will put a cap on the market. Market likes weak US dollar. Strong US dollar meaning that the emerging market will sell off. So you can see that the emerging market is down on the stronger US dollar. Commodities are down. So you can see that the emerging market and strong US dollar is going to put overhead resistance on the market. Let's see what else makes sense to talk about. Small cap biotech stocks has been underperforming the market. Another sign. I kind of been traded in a range. I would say since April, between 90 and 80. Small cap biostocks. Alternative harvest. I know that's been on the radar. A lot of people are following alternative harvest stocks. We've been covering several stocks. Right now, we're trading in the range, somewhere between 40 and 25. We were as high as at 45 in October of last year, sold off to 25, 22. So you see 50% drop, and now kind of a trading in this lower lows, lower highs for alternative harvest stocks. All right, so we talked about US dollar, we talked about treasury prices, we talked about spiders, technology, QQQs. Following the spiders, have not really broke 52-week high, kind of, well, actually, yeah, so just touched the 52-week high, maybe slightly higher, and now following the spiders trend. All right, so that's a review of the market. So again, in review, I would say that I think short-term 300 is the overhead resistance. Maybe at some point we will reach 302, 304 level. I think in the next 3 to 4 weeks. We're waiting for the FOMC decision. We're waiting for the US-China negotiations. We're waiting for the earnings season. And until all three get resolved, I think there is a lot of uncertainty in the market. So it makes sense to hedge your portfolio with the expectation that we will retrace back to the 50-day moving average. So how do you trade in the current market conditions?